Hello, this is Maitha Al Shamsi, and in this video I'm going to share with you the best practice on how to select your trading broker. Why this is important? Since you are starting to trade, it is really important to set your basis first by having the right broker for you. I'm going to share more details on how to select your trading broker or what is the best way to select your trading broker coming up in this video. Since I have been trading for a long time, I have figured out a way to select the right broker. And I have many clients from all the way from Australia to US who are asking me continuously what is the right broker for them. So I'm going to share how to find your trading broker that is fit your requirements and your country requirements. So the first step is you have 3 websites. The first one is Forex Factory, the second one is FX Street, and the third one, which is Daily Forex. I normally go there to check if these brokers are regulated or not, or what is the requirement and the feature and benefit that I'm going to get once I open an account with them, or once my client opens an account with them. I've been trading with a couple of brokers for more than 10 years now, and it fit me very well because I have selected from the beginning the right broker that is being regulated and my money is safe with them. So I don't risk that my money is with a broker that is not being regulated. I'm going to switch into the website. So the first website is Forex Factory. So here I've logged in to forexfactory.com/brokers. In this page you will find all the listed brokers with forexfactory.com. And the good part of this website that it gives you a specification for each broker. For example, HYCM, you can open live and open demo account if you would like. Their headquarters is in London. The company is founded in 1998. The regulation body is CIMA, CISEC, DFSA, and FCA. The platform that they are using is MT4 and MT5. Maximum leverage is 500 to 1, and you can also trade with micro lot of 1000. The minimum deposit is $100 and the base currency are AD, CAD, Euro, GBP, RUB, and USD. You can go all the way to each broker and select the one that fits your requirement as per your country and as per the regulation that they are having. So for example, if you are based in Australia, there are a couple of brokers that their headquarters is in Sydney, like FB Market, IC Market, Go Market, Vintage FX, and you can see what are the platform. For example, Vintage FX, they are having 6 platforms, which is Auto Trader, MT4, MT4 Web Trader, MT4, MT5 Web Trader, and Zolo Trade. Also, the good things in this website, when you select on the regulated body, it will open up a page and it will show you where this regulated. So I clicked on one of them and it showed me that is DFSA, which is a regulation body based in United Arab Emirates, Dubai. So going back to the list, I'm going to show you now FX Street. If you check fxstreet.com/brokers, so going to FX Street, then select brokers. It will also give you a recommended brokers for this page for fxstreet.com. So here they are mentioning that XM Group is the sponsor broker for this website. It is also regulated, and these all the regulated bodies. Going down also it will show you the regulated bodies, like for example FX Pro is regulated in many regulated bodies, and you can open up an account with $100 and multiple currencies on this website. For example, if I select this one, it will give you the entire details about this broker. For example, this one is TechMill, founded in 2014, business nature broker, regulated by FCA, FSA. And here it gives you the trading details. What is their commission? What is their leverage? The spread conditions, the payment method, and many things. You can read about their service. You can read about their promotion. They're having promotions like trade of the month, and they give you some cash price. So it's not that much important for us about the promotion. What is the main important for us is to know whether this broker is regulated or not. If it is regulated, this means that my money is safe with this broker if I'm going to trade with them. If it is not listed in any of these platforms or these websites, this means that this is not regulated broker, or that I'm not sure about. So I'm not sure if my money is going to be safe with them. So always check the regulation of these brokers before deciding to open an account. The third website that I'm going to show you is dailyforex.com. In dailyforex.com, they give you also the top rated brokers in their website. So for example, their best overall rate for this broker, Ava FX, is 9.9, and they have a trading review. So if you click on Ava Trade Review, you will find that review that they have for this broker company or brokerage company, and the review is dated 13th of October 2020, and it will give you all the specification about this broker. What is their rule for withdrawing of account? What is the regulated body security? It will give you all their details. It will give you the number. For example, this company is regulated in Dublin and also regulated in Australia. So if you click here, it will show you the source of this regulation and which country. Going back to our trading lesson, we have already checked the 3 websites where we can get more details about the brokerage company that we want to open with and what is the regulation that they have. And then based on that, we can decide with which broker that we can open to have more secure trading. So when I'm going to open an account, I'm going only to focus on my own trading. I'm not going to search whether this broker is regulated, whether I'm going to get my money back, how long it will take to get my money back, and so on and so forth. I want my money to be safe and secure with that broker that I decided upfront before risking my money in trading, and then I'm going only to blame myself. This is my advice for you. If you are going to open trading account for the first time with a broker, the first thing is to search for that broker, whether is it regulated or not, and then open an account. Before or without that, you should not open an account. Because once you open an account, then your focus is going to be on your trading and not on your broker. Second thing I want to share with you in this video is what you should know before opening a trading account. So what you have to do or to know before opening a trading account. So let's say that you have decided on the broker that you are going to trade your money with. The second thing is what you have to know before trading or before placing your first trade or before even funding your trading account. So this is my recommendation for you. The first recommendation is to not accept any trading bonus on top of your trading fund. First, what is a trading bonus? Trading bonus is additional money that is given by the brokerage company on top of your investment. So let's say you have invested $1,000 in your account. The broker could suggest that they will give you additional $500 on top of your $1,000. The broker will not give you their money blindly. There are certain requirements for that money to be yours. If you are going to trade, they will put certain restriction on that money. For example, the $500 that they give you as a trading bonus. The restriction that they will have on your trading account is that you will never withdraw any fund until you reach a certain limit or until you made as a profit on your account. So they will say you have to have multiples of 10 times the trading bonus. Therefore, you will not be able to withdraw on your trading account until you reach that condition. So from the beginning, I recommend you not to accept a trading bonus. So if you open an account, the broker will ask you how much money you are going to invest in your trading account. If you say like, I'm going to invest $10,000, then the broker is going to tell you, we have a promotion that if you deposit $10,000, we are going to give you additional $5,000. So your account is going to be $15,000. But they will not tell you the condition and the restriction that they have placed on your trading account. And the main restriction that they place, that you are not going to withdraw any money until you reach certain multiples in your account. The second recommendation that I want to tell you is do not take any trading recommendation from a broker. Why is that? It is because the main objective of the broker is to make money, obviously. And how the broker makes money is from two things: the spreads on each trade that you open. The second thing is from the losing trade that you have. So if they give you a trading recommendation, the broker is not a real trader. They are a broker who hold the fund for their client. So they will tell you, for example, that Euro USD, there is good opportunity to buy. Once you buy Euro USD, you will gain a good, or you will make a good profit. While the trend on the market is short for the Euro USD. But they will not tell you that because they want you to lose. Any trader who loses, that they will get their money from them directly. If you are winning trader, they will not benefit much from you because they are only gaining when you are opening any trade. Plus for us as a swing long-term trader, they will not benefit much from us because we are only opening few trades per week and per month. They will benefit more from day traders and intraday trader because they are opening multiple positions in a day, where the broker will gain from the commission and from their losing trade. And the last recommendation that I would like to tell you is to follow your own trading rules, including risk management and strategy that you have. I hope this lesson helps, and see you in my channel. Please subscribe to my channel, where I'm going to give you more insights about trading and how you can gain good income consistently from my own experience.